How we doing, traders? Let's go ahead. Let's get Money Mitch started today. We got a great show for you today. We're going to talk about, of course, the Fed raising. We're going to be taking a look tomorrow. The meeting is tomorrow. We'll take a look at that. That should be out at 2 p.m. Eastern. Will we get the 50-point basic height, the basic height rate? That's what we're going to be paying attention to. Also, of course, Chegg stock gets hit after earnings. We'll take a look at that. Expedia and Hilton tumbling. Airbnb, AMD, Starbucks earnings today, and of course, our interview with Mark Yusko, the CEO and CIO of Morgan Creek Capital Management. Let's go ahead. Let's dive right in. We got a lot to talk about. Great show for you guys. Hit the like and let's get it started. It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch. What's going on out there, traders? Looked like you guys were watching some PAX Lab content on Cannabis Hour. I hope that you guys enjoyed it. Let's get back into the stocks. If you guys got a stock you guys were watching moving today, definitely throw it up in the chat. Hit the share button down below. Let everybody know. We got a great interview coming up next. Mark Yusko. I'm going to get into some deeper conversations with Mark. You know, he's a great investor. Not only is he kind of somebody that knows crypto, but definitely knows different areas. We're going to get into it. I hope you guys stick around for that interview and definitely let all your friends know this is one you don't want to miss. Let's go ahead. Let's dive into the market. What did we see on out there today? We're going to definitely take a look at this. Let's go ahead. Let's see what we saw in the market. All right, if we take a look at the market, we're going to see that the SPY kind of just went sideways here. We did go up. I mean, up is a little bit reference. I mean, from the open, we're only up about maybe 0.35, not even a percentage. So I feel like we're just kind of hanging out right now. We're hanging out. Why? Because, of course, the Fed hike that is supposed to come. This is what's going to change a lot of the action right now. We're going to be paying attention to see, do we end up tomorrow down below, let's say 405, or do we come right back up through that 420 and close closer towards the 430s tomorrow? I think it's going to be a very volatile day. I think a lot of investors are waiting to see what happens. The question is, do we get maybe some comments before they come out? Does maybe one of the Feds start speaking in the morning? Pay attention. There's going to be a lot of action going on. There could be Feds talking beforehand, or pay attention, of course. What are the comments that Powell says? And, of course, the Q&A when we could get some fireworks. Today, I thought we might get some fireworks at the close, and it kind of was a relatively quiet one. It was starting to come back down, then, of course, came back up. Then what does it do? It just ends sideways action here. Definitely, that's what we're going to be paying attention to see. And like always, guys, we'll see how this trades. Let's go ahead. Let's get into really crypto is really what I'm all about. So you're here, Lord Byron. Hey, this is going to be definitely a good speech to you guys, a good interview for you guys to go ahead and check on out. If you like crypto, I would definitely recommend check out Moon or Bust. Those guys are enthusiasts in crypto. They're not just in NFTs. They do a lot of coverage on the different coins, the protocols, and a lot of the information that you guys need to learn to kind of master the crypto environment. I do see AMD being mentioned, Airbnb in the chat. We'll get to those. Let's go ahead. Let's dive right in here and see what was hot and what was not. Like always, guys, one of the things that I like to do is take a look at the sector and industry analysis. How is that working today? Let's go ahead and dive right in. All right, so we take a look here. What we're going to see is what energy led the day, guys. If we take a look here at the energy daily chart, you can see how we've come on back. We've closed this shadow now, really starting to come back here in oil. The question is, do we get back towards the high that we had on April 21st? That's what I'm going to be paying attention to see if we get to those levels or not. Big mover today, XOM pushing on up. I remember we were watching this one just out of this kind of push right here on this pullback. And you can see we rode on up there. We got on up there towards eventually 90s. Now we've gone sideways. We keep holding kind of these flagging patterns. We're going to look to see if we can get back above 89, 90s. If we do hit above 90s, I think this one could eventually get to 100. And it's all based on what happens in the environment, right? We've been paying attention to Russia and the Ukraine situation. Does that all of a sudden turn around? I think that's very important to keep on watch, because if that turns around, then yeah, the oil trade could turn around and eventually you see a knockback down. But I'm going to keep on watch to see if we got a little bit more leg in this run. All right, another thing that came back today was basic materials. It kind of filled the gap on up. As you guys can see, coal was leading the way here. Coal getting a little bit back here, and it did catch the support off the resistance. So coal is looking like it wants to come back. Is that BTU? No, actually today was AMR that was leading us up. This one was one of the best coal stocks. So if you want to take a look at coal stocks, I know BTU has come out a little bit out of favor, but we're going to look to see if AMR can continue making a run above 160 tomorrow and then continue to lift into 170. As you guys can see, this one has been holding the trend line really well and can continue to push. Mitch, I heard there was a reverse slip on CWeb ETF. Hey, I'll definitely a reverse split. Yeah, I'll take a look at that. I haven't found out about that yet, but I'm going to definitely take a look at that. CWeb, of course, you guys know, is the Chinese internet ETF, and there's a lot on there. So we'll see what happens on that one. You can look at stocks like Baba to see what happens if you're going to see these start taking off there. All right, let's go ahead. Let's take a look here. What other ones didn't do well today? Let's take a look. Defensives were in the red, and so were consumer cyclicals. It wasn't deep into the red. As you guys can see here, it was just a little bit. So what was really lagging there? It was lodging. Lodging kind of took a step back today. Where did it take a step back? It took a step back in pretty much all the names except IHG. And so Marriott taking a step back today, Hilton taking a 4% back today. But I think this was a lot led by, of course, we just mentioned it, the Expedia move that you saw coming on back down. And that knockdown showed us that potentially we could get a pullback in some of these lodging stocks, and you saw them start heading back down. Hilton definitely tumbling about 4%. Expedia down about 14%. So this is a little bit of a downturn. This is why I'm kind of worried about Airbnb. Let's go ahead. Let's take a look, see if we got in those earnings numbers that come on out and what has happened. Looks like we got a little bit of a pop towards 155. We're going to keep on watch of this one. I was trading this one earlier in the week. Been looking for it to recover. Glad I got rid of it because I didn't want to kind of leave myself that worry and that pain if it did come back down to, let's say, 140s. And you can see it is coming on back here. Let's go ahead. Let's take a look at what were these earnings. And I'll pull up my Benzinga Pro for that. That makes it 10 times easier. Let's go into it. That's Airbnb. And let's take a look here. What do we got? All right. Looks like I'm in SEC filings. I was like, where's the earnings? Come on, let's get it. All right, there you guys have it. Let's go ahead. Let's take a look here. Looks like Airbnb beat on top and bottom line, revenue rising 70% to 1.5 billion and beat the estimate by 60 million. Not the biggest beat, but the EPS here of a loss of 3 cents beat by 27 cents. That was pretty good there. EPS was a loss of 3 cents, and the expected here was 29 cents. So there you guys have it. Airbnb having a great earnings report, at least from their earnings per share. They're almost into the profitability there. They're only about 3 cents into the loss, and it was an expected loss of 29 cents there. So not a bad turn there for Airbnb, especially after we saw that Expedia downfall, right? Let's go ahead. Let's take a look at AMD here. AMD starting to push on up there in the after hours, up there towards, it got all the way up there, I think closer towards 96.80s here. We'll see if this can continue here. Let's take a look at the earnings number and what do we got? All right, so it looks like we don't need to go towards Seeking Alpha. Let's go ahead. Let's take a look here at what we got here. So we got AMD here, adjusted EPS at $1.13, beating the 91-cent estimate here. Sales were at 5.89 billion, beating the 5.52 billion estimate. And for all those AMD bulls out there, I'm sure they're going to be happy if they took their shot on this one coming back down. I'll show you guys. I was looking at this one to actually take a look at for a longer term buy. I didn't get into it. Maybe just took my shot. I had the green line drawn on out. This was a monthly resistance back in the 2021. Was looking for it to come into that 90, but really I was looking for a move down closer towards 73s, eventually getting on back towards the 100. As we can see, the earnings bringing it on back, but like always, we'll see what happens tomorrow and if AMD can continue making the gains. As you guys can see, it's trying to get back above 95 here. We'll see if it gets over that level tomorrow. All right, guys, let's go ahead. We're about to get into our interview. I'm super excited to get into our interview because we got a lot to talk about. I got a couple more questions than usual. So we're going to go ahead and dive right in. You guys do me the favor in the chat. Definitely smash the like button as we go ahead and dive into our interview. We've had Mark Yusko on plenty of times. We even had him on SPACs Attack. I remember Chris Ketchy doing the interview. We were talking about SPACs back in the day. We won't be talking about SPACs this time, but stay tuned, guys. We're going to dive right in.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
So I love about you guys, you just had all your callers in right then. And it's all about the community here at Benzinga.
All right, traders, let's go ahead. Let's dive right in here with our interview of Mark Yusko here, CEO and CIO of Morgan Creek Capital Management. Welcome to the show.
Hey, Mitch, how you doing? Thanks for having me back.
Super excited to have you on. One of the things is, you're definitely a pioneer in investment. I can tell you that much. We've been definitely bringing you back to Benzinga, but I haven't had the pleasure to interview, so I'm super excited about this opportunity. Let's go ahead. Let's dive right in. I couldn't think of a better way to kind of break the ice to start off with a little bit of what? Sock talk, man. I got ready for you. I got the Hey Arnold here today.
And you have the sock cam. I need
a sock
cam because in order for me to do this, I got to do this full nonsense of coming up on the table.
You see,
very dangerous, but I got the Bitcoin whale.
We got him, baby. Look at that. Look at that, guys. Hit the like, guys. We got the Bitcoin whale there.
I got the Bitcoin whale on today.
I did the sock game camera.
How the heck are you doing the sock cam? I love that.
I pulled my iPad down there and I just said, you know what? I'll leave it down here for the show.
That is awesome. I definitely have to figure out how to do that because I do this. I do the show every Friday on Blockworks, and I do a sock reveal. And my co-host is like, Mark, you got to stop climbing up on your chair because you're going to fall off live, and I'm going to be in trouble. So.
Hey, well, there you guys have it. I hedged that bet right there. You don't got to worry about falling off the chair anymore.
Sock cam is
We'll do a little sock game cam.
That is 2 thumbs way up. That is awesome.
Hey, I did the research, had to go to the socks, had to check them out. Now, let's go ahead. Let's dive a little bit more about you, Mark. Let us know a little bit more about what your position actually entitles you and what do you do as the CEO and CIO of Morgan Creek Capital Management.
So I came out of the endowment world, right? I was the CIO at University of North Carolina, Chapel Hill down here in North Carolina. And before that, I worked at my alma mater at Notre Dame. You can see the Fighting Irish up over there behind me. And I brought the endowment model of investing to other investors at Morgan Creek. So basically what we do is we help investors integrate alternative investments into their portfolios. Now, I hate the term alternative investments. Right? What does that include? Hedge funds, venture capital, buyouts, real estate, commodities. At the end of the day, they're the same thing. They're stocks, bonds, currencies, and commodities. So whoever thought of the term alternatives was not a marketing genius, right? People hate alternative stuff, alternative medicine, alternative music. So they like traditional stuff. So we did that for a long time. And really 8 years ago, I got introduced to Bitcoin and blockchain. And I was skeptical And it took me a while to kind of warm up to it and do the work. But once I started doing the work, starting in kind of 15, 16, I went down the rabbit hole, never to come out. And today, I actually spend less time in Morgan Creek Capital Management and more time in Morgan Creek Digital. So I am now a venture capitalist. I spend most of my day investing in companies doing infrastructure around Bitcoin, blockchain, and other crypto. I still run the Morgan Creek Capital Management, but I have teams that do hedge funds, venture capital, Chinese growth capital. We have a deal business. So we do everything related to investments. But I personally have spent a lot more time in crypto these days.
Hey, we'll get into the conversation of asset allocation in a little bit, but let's go ahead. Let's talk a little bit about what we've been seeing in the market lately, especially in 2022, is more of that contraction of value. The real question that I'm sure a lot of investors are kind of questioning now is, do we continue to see this as the environment for 2022?
Look, I have actually been talking about this for a while, and I was early. That's the euphemism for wrong. And look, I totally misjudged just how addictive QE and stimulus was to markets and how it would create a collective mass delusion on valuation, right? I mean, at the peak back in November, we had companies, like Zoom and Peloton and others that was trading at 100 times revenues. Forget 100 times earnings, because actually didn't have any earnings. But, valuations got to levels we've just never seen. We're at a level, when you look at market cap of the whole equity market relative to GDP, we were at 140%. That's twice what it should be. In the 2000 bubble, we got a little over 100, and that was crazy. And then we fell 84%. So it's not surprising that a lot of these go-go growth companies are down, to your point, the contraction of value down 50, 70, 80, 90%. And now we're having a little dead cat bounce the last couple of days, and everybody's excited. I'm like, guys, you're missing the point. A bunch of these equities are probably literally going to go to zero. I mean, there's companies like Carvana that just did some rescue financing debt that has all the elements of a pre-packed bankruptcy. So if I'm an equity holder of that business right now, I'm not really very happy. It looks like Apollo is going to end up owning that business at cheap prices. So that's a long-winded way of saying, Mitch, I think it's still time to be hedged. I think until such time as Powell does the Powell pivot, right? Everybody thinks he's going to raise 75 basis points tomorrow. I will take the under. I'd be shocked, actually, if he does even 50. He shouldn't do any, really. I mean, the economy is weakening. We had a negative print in GDP first quarter. I think second quarter will be positive, but I think third quarter is probably going to be negative, just like in 2001. I think we end up in a meaningful recession, and I think there's going to be pressure on equity valuations for a long time. Earnings are collapsing. I mean, collapsing. And here's the game in earnings, and this actually kind of pisses me off. So you step up to the high jump bar, you take the bar off the rack, you drop it on the ground, you jump over it, and you claim you're the world high jump champ. So a year ago, you told me you were going to make $1. A week ago, you told me you're going to make 10 cents. You report 11 cents, and I'm supposed to be happy. Are you kidding me? That's 89% lower than you told me a year ago. So this whole nonsense of adjusting down expectations to beat, right? We get 75% earnings beats. Well, no, they're not beats if you lowered the bar all the way to the ground. So I just don't understand why people can't do basic math. Like Apple, right? Apple, their net income is not materially different than it was in 2015, 16, but their earnings per share is 20% higher because they bought back a lot of shares by issuing debt and buying back stock. That's just financial engineering. That's not a growth company. You shouldn't pay 35 times earnings for that. So crazy stuff out in the market today.
I agree. I mean, I think, one of the things is, we just get led by a lot of kind of what's going on out there. Everybody wants to invest, but it's always trying to invest at the right pricing, right? Let's get into another conversation here. Let's talk about asset allocation, because I think it's something that's important, especially with kind of when we got that GME, the AMC kind of hype. We got a lot of new investors that came into the market. And with that, there was not talk of asset allocation. And I think that's important to talk about that. So how can giving the right balance of asset allocation give you an edge in investing?
Well, look, I'm going to offend a whole bunch of people here momentarily. So if you think about investing, it's 4 steps: asset allocation, manager selection, portfolio construction, security selection. 85% of the value occurs in those first 3 steps, which could be all lumped together as asset allocation. Only 15% is security selection. So the big returns are whether you're in stocks or bonds, commodities or stocks, international versus domestic, emerging markets versus international. That's where all the big returns come from. Manager selection matters too. Like, let's say I decide I'm going to be in international equities. Okay, which manager do I pick? Let's say I pick 10 different managers. Then portfolio construction comes in. Do I give each one 10% naively, or do I give one who's really good 50% and the others 5%? That matters. Then whether they buy Tata Motors or Toyota matters a lot less than, you know, whether I'm in international stocks or domestic stocks, where I think that the biggest stimulus is going to be. So asset allocation drives returns. And it's why if you look at the best investors in the world, they are overweight innovation as an asset class, right? Which is the 5th asset class. There are stocks, there are bonds, there are currencies, there are commodities. Then there's innovation, which creates the other 4 by building new businesses. So the best investors, the Yale, Princeton, Stanford, Harvard, Notre Dame, North Carolina, some multifamily offices and some good pension funds, they overweight venture capital, private investments, and these long-term innovation-focused investments. Now, that doesn't mean they make money every year. Look what's happened to the de-SPACed world or the IPO world. You know, those indices have all gone down because people aren't valuing the future the way they did as interest rates ticked up. So that comes back to what happened with the degenerate gamblers. This is where I'm going to offend people. So 2 years ago, world locked down, and people couldn't bet on sports because they stopped sports. They couldn't go to Vegas. So people lost their jobs. They couldn't go to work. So what did they do? The government gave everybody free money. Some 65% of that money got transferred into brokerage accounts, online brokerage accounts, and people started trading. There are 4 types of market participants in the world. There are investors, right? Investors actually try to buy things below their fair value and hold them for a long time. There are traders who actually don't really care what the value is. They just try to scalp, some on the ups and some on the downs. And people who are good at trading, aren't very many of them, but that's okay. Then there are speculators who buy stuff because the price is moving, right? I mean, we're hunter-gatherers. That's what we do, especially guys. You know, if it ain't moving, we can't see it. Your wife says, hey, get me the ketchup. You open the fridge. There's no ketchup. She walks up, grabs the bottle. You couldn't see it because it's not moving if you're a guy. So, and then there are degenerate gamblers. And unfortunately, when we gave free money to people locked in their house who couldn't bet on sports, what did they do? They watched Davey Day Trader and they started degenerate gambling on stupid stocks like AMC and GameStop. Now, people say, oh, but they went up a lot. Sure. In the short term, they did, just like Dogecoin and Shiba. And they will eventually go to zero, which is what their value is. But in the short run, degenerate gambling can win. The real problem with gambling in the market is if you hit it big early, because then you think it's skill and not luck, and you keep betting. And eventually it's like being at Vegas. If you win the first hand, just go back to your room, right? Just leave. Because if you stay long enough, the house will take all your money.
That's one thing I definitely have seen. Trust me, I do a little fun, very little on sports on the side. And yes, that's exactly how it goes, right? If you stay in that game, just going to give it all back.
And there's nothing wrong with gambling. I like a good game. I like to play poker. I like to spend a little entertainment money on blackjack. I know at the end of the night, it's all going to go to them, but I had fun. I enjoyed myself. And on the occasion, like I played poker one night, and it's one of my claim to fame. You know, David Swenson, God rest his soul, one of the great investors of all time, the CIO at Yale. There was a big poker game that happened at an annual meeting every year, and a bunch of CIOs would get together. And, you know, David was famous for, at the end of the night, he'd pull out the cash. So it was a, $20 buy-in. He'd pull out the wallet and he'd start trying to buy pots. And for whatever reason, maybe I had one too many cocktails or whatever, I decided I'm not going to let him do it. And I dug into my wallet and I mashed him, and I got the river card. And so I won like $1,400, and my wife confiscated it because it was ill-gotten, but it was fun. It was fun.
Hey, that's how it is. But one thing I definitely think that you brought up there that's important is noticing when things are a gamble and when things are an investment. There's completely two different worlds there.
Look,
Let's talk.
If you buy GameStop, because a bunch of people said they were going to buy GameStop, that's gambling. And I'm not saying that's evil or wrong, but it's gambling, because the reality is that business likely ceases to exist in the digital age. Now, could they change path? Like if the price goes up enough, could they issue new stock and use that money to buy something that allows them to pivot their business? Kind of what Adam's trying to do at AMC, where he bought the gold mine. Now, I'm not sure the gold mine is the best thing he could have bought. I could think of some higher IRR businesses, but here's the thing. Reflexivity, right? The Soros philosophy is real, right? If you do something in the world, it makes an impact. That impact can change behavior or change outcomes. It's like if everybody borrows money to buy stocks and stock prices go up, okay, those companies can then issue new shares, get more money, and if, in theory, allocate capital appropriately and do good stuff. But here's the rub. If you have good capital allocators at the companies, the problem is there aren't that many good capital allocators. And if the capital allocators destroy the capital, then the value of the company falls. You've got debt you have to liquidate. And this is where we get the flash crashes. That's why you see, crypto prices fall dramatically, actually, like they did this afternoon, or like they did on Saturday night. Or you see it in some of these stocks, like, Amazon went down 14% instantaneously when they missed earnings because people were levered long. They got a margin call. And in a margin call, you don't get to decide, I think I'll stick with this because I believe in the long term. You have to pay up and you have to liquidate. And if you don't, they'll seize your assets and liquidate for you.
Exactly. That's definitely one of the major concerns. I mean, especially for the people that, we won't even get into it, but the people that go on margin and then are just trying to take that gambling approach. We know how that goes. But
margin's a tool.
Yeah.
Right. We all use margin in our life, right? You buy a house, you don't put 100% down, you put 20% down and borrow 80%, 4-to-1 leverage, perfectly legit, because you don't mark to market every day. Now, some people even put 10% down and go 10-to-1. Crazy people, right? Put 1 or 2, 3% down and lever up crazy. Now, the problem is if the market price moves even 3 or 4% at that level, you've lost all your equity. But the bank doesn't call your loan just because you're underwater. With margin on liquid securities or crypto, and crypto's the worst, right? You have to put your crypto in the hands of the lender. And as soon as you violate the loan to value, they actually take it. In fact, and I won't pick on him, but someone I know very well, perhaps a family member, called me up and said, "Hey, they stole my crypto." I'm like, "What do you mean?" "Well, I borrowed a bunch of money and I bought some and now they just took it." Like, no, you were an idiot and you levered up more than you should have. The price went down. They did a margin call. You didn't make the margin call and they seized the collateral. That's how it works. Now, someone did say to me, and I think this is legit, that there are a couple people out there, a couple firms out there internationally, that perhaps that's their business model, to build their allocation of crypto assets, that they lure people in with the promise of easy riches, get you to lever up and then seize your collateral. Okay, that's certainly possible. So, but at the end of the day, it's, buyer beware. If you don't understand the rules of the game, don't play.
Yeah, I mean, I can. We could bring up day trading margin tricks that there is plenty out there. So let's go ahead. Let's get into a little bit about crypto action. We
Yeah.
definitely know that you know a lot about crypto. So let's dive into it. The first question I have is, do you think that we're in kind of a crypto winter? Do you think that this is coming,
Yep.
or do
No,
you
we're in
see?
it. We're deep. We're deep in it. We're halfway through. That's the good news, right? We've like passed the winter solstice, so the days are getting longer, but we are in winter. And people hate when I say, no, Mark, the 4-year cycle, it doesn't exist anymore. Yes, it does.
Yeah.
And it will, because it's coded in to Bitcoin, which is the king, right? I say that, crypto is like, and it's not as politically correct as it used to be, but it's like Saudi politics. There's the king, the crown prince, and all the other princes that hate each other. There's 6,000 of them. And same thing's true in crypto, right? There's Bitcoin, the king, there's Ethereum, the crown prince, and there's all the other princes that hate each other. And that doesn't mean some of those princes won't be great projects. Solana's a great project. Avalanche is a great project. There are a bunch of great projects, but ultimately the king drives everything. And the king has this 4-year cycle, and it's built into the code, because every 4 years, the block rewards get cut in half. And if you think about this is absolute genius, because what it does is incentivizes a price increase, because the miners have a fixed cost, the electricity they use to secure the network. Well, if your block reward gets cut in half, you either go out of business or the price has to rise to make you whole. So as the price rises, that attracts new entrants because they see the price moving. Again, we're hunter-gatherers. And there's this self-fulfilling prophecy. And so the network effect, Metcalfe's law, then takes over. And we follow this beautiful beautiful Metcalfe's law parabola, but then greed and fear. And the daily price is a liar, right? The daily price is not the value. The value of the network is based on the number of participants in the network. It's inverse to the sum of the squares. And so the price is just what two people agree to exchange a small amount of that product. And so the price can be much higher than the value, like it was in 2017 before the crash. The value was 10,000, the price got to 20, and we crashed, and we went all the way through fair value, all the way down to 3,000. Then we were wildly undervalued, and then we went right back up, and then we blew right through fair value again at 35,000, all the way to 59,000, 60,000, and 69,000. And now, we're back down in the high 30s, closer to fair value. But my guess is we stay in this, 45, let's call it 35 to 55 over the next 12 months. Then in anticipation of the next halving, we start to rise again. And I think we take out that $100,000 mark sometime in, 23, something like that.
Yeah, I mean, I still remember the waves that came in earlier. And so, hey, that's a lot of the way it goes. It's not just going to be one wave up. There's going to be the down waves. I think that's what a lot of investors just don't even think about. They just think that if something's valued, that it's just going to increase. And there's always fluctuations in that, right? Because and I think I've heard you say it too, the prices are liars sometimes.
No, but Mitch, you outlined it really perfectly, right? It's in the early days, the market participants are the investors, because the price is lower than the value. And so for years, right, in 2000, after the 2013-14 bear market, for 15-16, the price was really low relative to value, but the only people willing to play were investors, people who did the work to understand how Metcalfe's law worked, and they bought in at 1,000 and 2,000 and 3,000 when the value was closer to 10. But then as you approach fair value, you go from the investors to the traders. And the traders are like, I don't really care if it goes up or down. I just want vol so I can make money. But then as you start to get above fair value, now the price is rising every day, right? Literally, it's just in a bull market. And that's when the speculators come in, because the speculators just see money go up, price go up. But then the gamblers come in, and the gamblers always come in at the very tippy top, because human beings do two things really, really well. We buy what we wish we would have bought, and we sell what we're about to need, right? And that's why if you look at 20-year returns in equities, 20 years, right? The return on stocks is 7.8%. Okay. Return on bonds is 5.8%. So all you had to do is own one or the other, or maybe a 50-50, and you made somewhere between 5.8 and 7.8. The average investor over that 20 years made 2.9. What? Well, because they buy at the highs and they sell at the lows. And so the same thing happens here. As the speculators come in on leverage, the gamblers come in on leverage at 20,000, they get wiped out, and that causes the cascade down with the margin calls. Or look in 2020, right? We went down 50% almost overnight because of massive margin calls. And that wasn't just, and see this thing, it's not just margin calls in crypto. It's margin calls in the other markets. Because if you're super margined in GameStop or AMC or even the S&P 500, and you get a margin call, you have to sell what you can sell.
Gotta rotate.
Bonds, gold, and crypto that are liquid, not what you want to sell. And you don't have the luxury to say, you know what? Well, unless you're the guy in China, this is crazy. The nickel guy, right? Nickel spikes, he loses billions of dollars. and HSBC says, you know what? Sure, don't pay us. He's like, no, I'm not paying.
Hey, you gotta have good friends, right?
and then the LME canceled the trades.
Yeah.
Which is like, it's like canceling student debt. I'm like, no. Every liability is someone else's asset.
Yeah.
If you cancel the liability, you're canceling someone else's asset. And I don't understand why people can't do math. Well, don't understand accounting. But it feels good to say, oh, well, we're going to forgive this guy's debt. Well, no, someone else made a bunch of money.
Exactly.
You know, it was like, which one was it? Toyota, I think. No, Volkswagen. Volkswagen had hedged their nickel because nickel was a big piece of catalytic converters or something. Yeah. And they made more money on that hedge than they did selling cars. But then they didn't get the money because LME canceled the trades.
Yeah,
that's bonus.
That's when I say definitely networking is important. Know some good friends. I have to ask the question. I don't know if you've been asked this before, but do you own any NFTs?
Yes, but not enough.
Not enough. What do you?
So here's the thing.
If you feel to share?
The true story, and again, it's not a bad story. It just is what it is. So you can't do everything, right? I mean, literally, you can't do everything, and there's only so much time in the day. And so, as we were building Morgan Creek Digital in our early phase, 2018 to 20, we were pretty good actually, and have done pretty nicely investing in the core infrastructure: Coinbase, eToro, Figure, BlockFi. We've had some nice wins. And we also invested in Bitcoin and Ethereum and Solana and the Graph. And that was great. In our fund 2 in the 2020 period, we as a team became a little too maxi, a little too Bitcoin maxi. And we missed some stuff we could have done in DeFi. We missed some stuff we could have done in Ethereum. And we kind of missed the original wave in NFTs. And it's very frustrating because a good buddy of mine actually sold the original NFT marketplace to the Winklevoss twins. We are big investors in the Winklevoss twins company, Gemini. And so we saw the value of the platform, but we didn't spend the time to really understand the network effect of these communities. And so that's a long-winded way of saying we own some, I personally own a couple here and there, but they're more art focused as opposed to community focused. And ultimately, I think what's going to happen in NFTs is we're going to move beyond art and JPEGs to everything. Like literally everything in the world will be an NFT, a non-fungible token. And all a non-fungible token is a line on a database on a ledger, right? It's a token, just an entry on an immutable ledger that's cryptographically secured. But every stock, every bond, every currency, every commodity, everything, every property title, every piece of real estate, all of it will be NFTs, not just JPEGs. But the thing that we did miss with Bored Apes and Punks, Bored Apes more than Punks, because Punks, you had no rights early on. Now they got bought, so now you do get the rights. But Bored Apes was the first one that realized that there was more to owning the ticket to the country club. You had the rights to the image and the likeness and the future things that would be created. So, but I struggle with this a little bit, Mitch, that is the Bored Ape / other communities going to be the way of the future where we create content around these characters?
Yeah.
Because they're all kind of similar. Like I get the Marvel character collection. Makes perfect sense to me. Wolverine's different than Spider-Man, different than, Batman, different. And I guess that's another one. But they're all different. And, when Carl Icahn bought Marvel for $6 billion, people thought he'd lost his mind. They thought he was an idiot. The last Spider-Man movie made $6 billion. One movie, one character. So he wasn't an idiot. And when he sold to Disney, I love this part. The Disney CEO, Michael Eisner, called everybody in senior management and said, here's the deal. If you get an email from a .marvel address, or you get a call from someone on a Marvel line, you drop what you're doing and you take that call because they are your new boss. Now think about it. This is one of the most iconic brands in the world saying the future is these characters. So I get the idea that the potential to create characters out of Bored Apes is monstrous. But I'm not sure that that's better than loot, where you create items and then you incent development around those items to create ecosystems and games. Because here's the thing. Games are hit driven and they're really hard. Now, when you get one, like Fortnite, like I posted a picture the other day, I did a presentation about the metaverse. And I said, here's a guy who's already in the metaverse. And he actually posted a screenshot of his phone and it showed, the hours, 14 hours and 54 minutes in Fortnite in one day.
Oof.
Now that guy's living in the metaverse, right? He's physically in the metaverse already.
He is an
many
NFT.
of us, if we pulled up our screenshot, it would say 6 hours, 8 hours, whatever. And so that's real. But monetizing it is hard because, Fortnite's owned by Epic Games right down the road here in North Carolina. And Pokemon Go is owned by Niantic, another private company. And you can't own those, right? The users don't own it. Like I have a pretty, truth be told, my son got me playing Pokemon Go and now I probably play more than he does. And I have a pretty valuable collection because I converted my time into value. Now I can't monetize it because I can't NFT it or sell it off or, there are marketplaces where you can, but I it's not worth that much. But in the future, people's time will be monetizable through NFTs. I was talking actually this morning, total non sequitur. I don't know if you're familiar with the NFT that Tim Berners-Lee did. Tim Berners-Lee invented the internet. He wrote the first web page in 1991 using TCP/IP, which you and I are using right now to communicate, and invented the internet. And Vint Cerf, who invented TCP/IP, neither one of those guys is super rich because they couldn't own TCP/IP. The guy who got rich was Zuck, stole the idea from the Winklevoss twins and created a business, gave it away for free, not free, and monetized our data. So now what Tim did, I love this, he took the 9,500 lines of code, that's a lot of code, turned it into an NFT and sold it to Sotheby's for $5.3 million. I love that. That's awesome. So I was talking today to, one of our venture partners is the guy who's the most cited person in the Bitcoin white paper, Scott Stornetta. and they're going to auction off these papers as NFTs. How much are those going to go for? I don't know. They're part of digital history.
Yeah.
And then what's cool is the smart contract is actually going to give the owners a share of any future sale. Because that's another piece of, it's like a ticket, right?
Yeah.
I buy a ticket to a concert, I sell it to you, I get to keep all the profit. Well, now some of that profit goes to the artist, some goes to the venue, some goes to the writer. That's pretty cool stuff. And it creates this economic incentive model that we've never been able to do, because the middle people, the record labels, the distributors, the scalpers, the bots. Like I tried to buy my son a PS5. Forget about it, right? Forget about it. Because this kid, and they wrote the story about it. This 14-year-old kid wrote a bot that bought all of them from Walmart. And he showed this room full of these things. And like, well, who let him do that? Well, nobody. He was just smarter than Walmart, because Walmart didn't say you can't send more than 5 to a certain address. He bought them all. And I want to hire that kid, by the way. I don't want to penalize it. Some are like, oh, he should be put in jail. Bullshit. You should hire him. He's great. But anyway, long answer.
No, I agree. I mean, you said it best there. I mean, NFTs are all going to be all about how we go from, let's say, just a profile pic to utility, and how it really kind of implements. I've talked about how it's going to definitely change the metaverse, and then we really get into a digital economy. I think the thing that I'm focusing on, of course, is VR and AR adoption. I think that's really important to take that next step into the metaverse. Look, and so I want to see everybody with the goggles.
No, you're exactly right. And but it's not the goggles. And here's why. So I was playing this game with my son last night on Oculus. I got so motion sick. I had to sit down.
Oof. And
it was horrible. I mean,
that motion sickness on it is really bad.
And so I think it's AR. I think VR will exist, but I think the real experience is, and it's probably glasses, where my physical world merges with a digital world, just like when I'm playing Pokemon Go, right? I could pull up Pokemon Go and I would see a little Pokemon on my computer here and I would catch it and no big deal. But better than that, I want to walk in my office in the morning and I want to put on my glasses and I want a room to open up, and I want it to have all the news stories about X over here and the news stories about Y over here, so I can see them, right? So I don't have to click on something and decide if I want to read it. I can actually, because a picture is worth 1,000 words, I want to go into this lobby and I want to be able to see all the things that I care about. And I want the AI to have gone through my interest over the previous day and say, okay, I'm going to serve you up this stuff. And that will be the first entry point. But I want it to be my physical space with this AR overlay. I don't want to put the goggles on and be completely, that's just me.
I can't blame you. I think that's exactly, at least from my idea, I think that's what Meta is really looking into more of. It's more of that utility use, more of the, even like, let's say you or I, business use. Maybe we have our charts or everything. Take away our desktops. We don't need these things anymore.
Well, we've all seen the movie, right? Where the guy's swiping at
exactly.
Swipe.
That's it. Eye tracking is going to be important, I think, and that's the next level. So,
and at the end of the day, it's all coming, right? And what an NFT.
Just to interrupt you, I have a good word here for you that you like to use, a phrase that you use often, is the waves of technology. And I feel like this is part of the new wave that we're getting.
100%. And that wave will be monetized by NFTs. Because an NFT, I want to change the nomenclature. I want people to call it what it is. It's a digital property right. It gives you or me or anyone else the right to own property in the digital space. And whether that property is code that we created, whether it's a thing that we bought in a game, whether it's a skin, whether it's a piece of virtual. I mean, think about this. Think about all the money that people spent on clothing, obviously not me, on clothing to make pictures in Instagram, right? They post all these pictures and companies would give influencers real clothes or real handbags or whatever. in the future, people are going to spend money on virtual clothes, like literally JPEG-ish things that you wear in your Instagram picture to be an influencer. And you won't change physical clothes. You'll just change your virtual clothes. And here's the thing. This is where, there was the big sale yesterday in ApeCoin for the plots of land in Bored Ape. The other side, right?
The other side, exactly.
And look, it might work. It might work. But here's the thing. If I want to go to a concert in the metaverse, I'm probably going to go to MSG first. Now, if MSG doesn't have good stuff, I'll leave. And then I'm probably going to go to Disney's Town Square because I trust that brand. And if they don't have good stuff, then maybe I go to Decentraland. But because I don't have an ape, I can't get into this other one. So until they open it up, not going there. So I'm not really sure until they relax the laws how that's going to work. But I'm not even going to go to Decentraland because that's not a brand I trust. Now people say, oh, that's because you're a boomer. No, ask millennials too. We all have brand loyalties. And I just think that the idea that the metaverse will be like the physical universe is a little bit flawed. And here's why. Fifth Avenue in New York is not replicable, right? There's only one. Now you can say there's the equivalent in France and whatever, but there's only one Fifth Avenue in New York. In the metaverse, there's gonna be a whole bunch of places trying to create that Fifth Avenue experience or that theater experience or that Coliseum experience. And all I have to do is change the hashtag or the backslash where I want to go on my computer. I don't know. I think Fortnite is a great example. Fortnite had Travis Scott do a concert in their town square. Mm-hmm. And I think I have this right. I think they had 2.8 million people show up for the concert. I mean, that's a lot of people. Yeah. That's way more than you could ever have in a physical concert ever.
Exactly.
And I, boring old guy, even did. And the only thing that was better than that is, again, it was at the Winklevoss party last year at Bitcoin 2021. And they said they're having a DJ. And, I said, oh, who's the DJ? They're like, it's Diplo. I'm like, don't know who that is. So I'm texting my kid, hey, Diplo's coming. They're like, Dad, oh my God, you have to stay. And so 11:45 comes, no Diplo. 12:30 comes, no Diplo. I felt like, what the hell? Like, oh, they don't even go on till 2:00. I'm like, I'm out. I can't wait that long. I'm old. So, but as I was leaving at 12:45, there were bus loads of young people just coming to the party. They probably woke up an hour earlier and they were flooding the party to go watch Diplo. And so they got it and I missed it. But
hey, that's how it's going to go. I think it's going to continue to develop. Like you said, it's always about the waves. And I think it's important the way you refer to it, the waves, because nothing just goes straight up. We're going to have those dips and we're going to have to look forward to what investments could come forward, what innovations could come. And I think it's an important thing to take a look at and kind of keep on watch.
The waves do increase in amplitude because we're building on better tech, right? When we had no computers in the 40s, things kind of sucked, right? Everything was done by hand. It was, productivity wasn't that high. We're just coming out of the war. And then in 1954, they invented the mainframe and suddenly big businesses could have a computer and they could be more efficient. And Charles Darwin said, I think one computer per country will probably solve all of our problems. Maybe a few more than that. So now
a little bit off.
One per country, probably more than that. Then 14 years later, we had the next wave of microchips allowing mini computers, like only as big as this room instead of this whole building. And now other businesses could have computers and we got more productivity. And then 14 years later, and why 14 years? It's because of young people, right? Young people create everything new. Old people don't create stuff because we don't And we don't have the ability to imagine the unimaginable. Young people don't know what they don't know, so they just create stuff, right? Mark Andreessen, 19, when he invented the browser, which opened up the internet for everybody. Larry and Sergey, 20 plus years old when they did Google, which changed the world for everybody. And so the personal computer was a big deal, but the average, older person isn't going to see it, but the young people adopted it. And then 14 years later, we had the internet. And the internet, everybody was sure would never be more important than a fax machine. And who needs the internet? And Bill Gates was trying to convince you, no, you don't trust an open network. You want our intranet. You want the Microsoft baloney. That's why I don't think Meta is going to work. The idea that the metaverse is centrally controlled, that's like military intelligence or jumbo shrimp. It's just an oxymoron.
Yeah.
It doesn't work, right? It has to be decentralized and open.
Has to be.
So it doesn't mean they can't participate, but the idea that we're all going to go to one metaverse, no chance. So 14 years later, these came along. And what's amazing, when this was released in 2007, Apple stock went down 40%, 40, because everybody was certain that no one would ever pay $500 for a phone. You're right. They pay $1,500 for a phone. Because who needed, you don't need a smartphone, Warren Buffett. I'm perfectly happy with my flip phone. Yeah, great. Lots of people have smartphones and a lot of people are going to have them in the future. But now, 14 years later, it's the blockchain era. So in 2024, still a couple of years from now this wave is going to be orders of magnitude bigger. And here's the cool part. The difference between linear and exponential. If I take 20 linear steps across the office, I get to the other side of the office.
Yeah.
I take 20 exponential steps, I go around the world.
Yeah, you might be at the gas station by then.
No, twice around the world.
That's
twice.
that's
People
the
say, no,
power.
that's not right. And I use an even more simple example. I said, take a piece of paper, right? Take this piece of paper, fold it in half again, fold it in half again. When you get to 7 times, you can't do it again. You literally, people try this tonight, take a piece of paper, fold it 7 times. I defy you to fold it 8 times. Can't do it. If you could fold it 20 times, it'd be as high as your house. If you could fold it 30 times, it'd be as high as the atmosphere. 50 is the sun, 100 is the known universe. So exponential growth is really big. So Web 1 was, think about a parabolic curve that goes like this, right? Web 1 was the area under the curve above the x-axis on the left-hand side. It was decent, okay? Microsoft, Cisco, Intel, that's a lot of wealth. Web 2, now you get to the knee of the curve. Area under the curve is bigger. That is Alibaba, Apple, Netflix, a lot of wealth, first $1 trillion companies. Now we're going parabolic. The area under the curve now, basically unlimited. So the Web 3 world, the metaverse world, is the greatest wealth creation opportunity for sure I'll see in my lifetime. You guys may see a better one, but for sure in my lifetime. And look, I'm gonna be here a long time. I got an 11-year-old. I got to be here. And here's the crazy thing. My wife had our last kid when she was 47, and they surveyed all the women who lived to be 100, and they found they had one thing in common. They all had babies after 45. So my wife's definitely living to 100. So I got a lot of work to do to stay around.
we do.
But the wealth creation opportunity in this wave is so monstrous. And it's why the migration of talent into this space is like nothing I've ever seen.
Yeah,
right?
I can tell you that from firsthand experience. I went to ETH Denver and was just blown away by the amount of not only capital infused, but the talent out there and young talent that wants to, that has the creativity like you talk about and is really pushing towards it, whether it be on hackathons or trying to really just break the bounds of what we've known to something completely else. And a lot of that coming with
two things that are going to happen, Mitch, that are just extraordinary. One is there's the little e entrepreneur. A little e entrepreneur takes new stuff and makes old things better. So just that in the blockchain era is going to strip out 7 trillion with a T. And remember, 1 trillion is $1 every second for 31,710 years. So 7 of those babies every year out of financial services, wasted money on COBOL and Fortran and C++ and all the nonsense of intermediaries that have had a good 800-year run. All of that is going to move to new rails on Bitcoin, on Ethereum, and Solana and Avalanche, all of it. Okay. That's the little E entrepreneur. The big E entrepreneur are the ones that are going to create new stuff and new ways of interacting. Someone's going to solve the problem. So when I put on the goggles, I don't get motion sick. Someone's going to make it so when I walk into my office, I can see this virtual library of the stuff that I want to spend time on, and it'll kind of push stuff in front of me. All of that's coming, and all of it will be ownable through NFTs, right? Or digital property rights. All of it will be monetizable through play to earn, play to work, play to move, all of these things. And ultimately, the communities like Bored Apes and Punks, they allow communities to turn into economies. And that construct is so powerful that it's almost mind-numbing for the average person to think what a like-minded group of people working toward a common goal, or even uncommon goals that are incentivized to win, right? And the thing I love about this is it moves us completely back toward capitalism, completely away from socialism, away from crony capitalism, where meritocracy is rewarded, where creativity is rewarded, where we unlock, right? And Jimmy Song talks about this so beautifully. He says, look, if you work for a salary, you're a slave, which is a highly charged word and people don't like it. And but face it, you're a slave.
Yeah, that's the
It's
truth.
worse than being a slave because you're a slave to an asset that devalues every single day because of inflation or currency devaluation. So once you remove that and you work for Bitcoin, the new money, or in the metaverse as part of a economy, now you've unlocked, like if you can save in Bitcoin instead of dollars and your money doesn't devalue, it actually appreciates because of the devaluation of fiat. Now you can spend your time being more creative, unlocking your human potential. And that doesn't mean that everybody's going to come up with Einstein's theory, but everybody can be more productive, more creative, more engaged, and feel less under the thumb of the few people at the top. And it's such a liberating construct. And, it's so far removed from the original cypherpunks and anarchists and libertarians. They're all about, we want to burn it all down. No, we don't.
Yeah.
We just want to make it better and return it to its roots and incentivize collectively this ability to create and share and motivate and reward and incentivize and strip away the power from this tiny minority that has everyone under their thumb because of the fiat system.
Yeah, I think you're dead on that. I've loved this deep dive conversation. We definitely gone into overtime, so I thank you for spending time with us, Mark. We're going to go ahead and sign off here, but hey, I definitely agree with you, and I think we're just starting to. And I think that a lot of people don't really do kind of a deeper thought process and what really blockchain and Bitcoin and the digital currencies are all bringing to the world, and how we're really kind of changing that. I love how you approached it. Really, a free market is something that I think we all can appreciate from, because it opens the opportunities.
It's
right?
So much bigger than gambling and speculation. It literally is technology that allows us to change the world. And if you spend even 20 hours, let's just pick a number out of the air. If you spend 20 hours listening to podcasts, reading, listening, watching people on YouTube, just listen to the people that talk about this construct. One, you can't do that and not come away super excited. You just can't do it, right? If you don't watch, you can easily be skeptical and say, it's a Ponzi and I don't want to be involved. But if you watch and do the work, you cannot not get excited. You cannot not believe in a brighter future, and you cannot want to spend all your time in the space. So thanks for having me.
Perfect. I appreciate it, Mark. I'm definitely going to have to clip this whole interview out because hey, this was an awesome time. I appreciated you taking your time and also giving us your transparent opinions. I know that our viewers definitely appreciated that. So thank you for joining us, and we'll definitely have you back, Mark.
Thanks, Mitch. Be well.
Thank you. There you guys have it. A great interview. Honestly, there's not many times I go past 5, let alone 5:30. And the reason why I kept going there is because the quality of the conversation there. I think that most investors, yes, they look into the stock market, and that's what my show is a lot about. But alternative investments, asset allocation, understanding that there's way more ways to make money in the world than just going into equities. And so, yes, I know that a lot of people are talking about how bonds have been struggling, but there's definitely different ways of making money. And if you haven't taken a look at that before, even I myself need to take a look at more and more asset allocation, maybe emerging markets or something like that. It's not always just in our markets. So take a look at this conversation, take a deeper dive, take a look at how you're approaching investing and see if you're really diversified. Or are you just putting all your eggs in one basket? I hope you guys have a great night. We'll see you guys later. There's already a couple of webinars going on. We also got some earning calls going on, AMD, Airbnb. Go check those out, guys. Have a great day. Have a great night. We'll see you next time right here on Benzinga. See you guys next time, guys. Take care.
Check.